everybody. Hope you had a great Thanksgiving. Colter Brown here from the Northern Ag Network with our update on the livestock markets. Well, we're finally starting to see the effects of low profitability and drought-tightened cattle supplies across the supply chain. It's turning leverage, but not exactly leading to improved profitability for all producer segments. Today, we're going to talk about the shifting cattle industry leverage, and we'll also look at the recent cattle on feed report, the cattle futures and cash trade. We'll see how the calf and lamb prices have performed in late fall, wrap up with the bred cow and bull markets, and talk just a little bit about beef demand concerns as well. Of course, I do want to thank the sponsors of our report right off the bat here. Ag Risk Advisors have been with us since the start, and they're a great resource to help producers manage risk. If you're watching this after December 1st, I hope you got your pasture rangeland forage policy in place and ready to go. You can keep track of that policy with text alerts and other tools and resources that are available at agriskadvisors.com. Well, thank you to the Wyoming Beef Council for continuing to support us with this report, and thank you for their efforts to build demand for beef. And Montana Fish, Wildlife and Parks would like to remind hunters that respecting landowners and the access they provide is more important than ever. Positive relationships between hunters and landowners impacts all recreationists. It's up to us. Respect access, protect the hunt. Well, as we get into our markets here today, I thought we'd flip back to the last cattle cycle. You'll of course remember that in 2014 and 15 we saw the cow herd bottom out at some of its lowest numbers in decades. That of course spurred the big price rally that we saw there, but coming out of those low numbers, it was a rapid expansion in numbers, and that of course did result in the low prices. One of the reasons we saw prices drop off so sharply was in the decade prior to that, we saw no less than 8 major packing facilities close in that time frame, so we didn't have the hook space to support a larger cattle herd at that point, and so we saw those prices fall. But now we peaked the numbers in 2019, and since then, we've seen this cattle industry decline. Of course, much of that driven by drought here over the last 2 years, and that really has affected producers. But the writing is on the wall that we'll see improved profitability here over the next couple of years. One of the factors that really shows just how tight these numbers are across the supply chain is the cattle on feed report. That report came out in November and showed total inventory in feed yards down 2% from last year, pretty close to where it was expected. But the big surprise was in the placements figure. That was down more than anticipated, 6% lower from the year before, and actually the lowest October placements since 1996. So we've entered an interesting situation here where the cattle futures aren't exactly responding to the fundamentals the way that we're seeing in some of our cash markets. Now, as you look at the live cattle, they are trading on the high level for the December of where they've been recently here, but still with the strength we're seeing in the fundamentals, we're not seeing that really equated over to the live cattle. But if you look out into some of those deferred contracts, we're seeing some big gains, especially out into next fall. You've got October live cattle pushing up against $1.60. So there is opportunity for this market to improve. Feeder cattle have been a bit more flat over the fall here, despite the fact of just how tight these numbers are getting. Of course, corn prices definitely a limiting factor in the feeders, and in the month of November we saw almost every contract move lower. But looking out to next fall, you've got September feeders at 201.82, so there is some opportunity there. I do want to talk about the cash cattle market though. That's really been one of the bright spots in the cattle industry all through the fall here. Just in the month of November, we saw live cattle up $5 on the average, dress sales 9 to 12 higher. Flip back to where we were in July, it's a $15 increase in the live cash sales. That's $200 per head that we've added into this market. Now, the Sterling Beef Profit Tracker looks at profitability on a cash basis across the industry, and they're saying that we're definitely seeing that leverage shift. They're projecting packer margins at just $7 a head, whereas feeding margins they're saying at $124 a head. We know that the leverage is turning in the industry here. Tighter front-end fed cattle supplies are going to help the industry out. As we look to the calf market though, of course, we say leverage has turned, but we're not seeing the profitability yet really turning into the cow-calf producers, especially the way that they would want to see it. As we look to next year, though, it's going to be one of the smallest calf crops we've seen in close to a decade. You can see the numbers for feeders outside of feed yards. It's as tight as it's been since 2014, and that number is going to come down over the next 2 to 3 years. Of course, some of our big concerns right now are putting an end to the drought, getting feed costs a bit more manageable, and giving cattle producers the opportunity to expand. These prices are telling them to expand, but just don't really have those forage resources to do so. As we look at where the calf market has been in the month of November, I generally say steady to a little bit higher. You can see some of our recent sales there. Faith Livestock had some big sales all through the month here. Upper 4-weight steers selling 233 to 241, 5 to 5.5 weights 216 to 224, upper 5 weights 210 to 218. At Miles City Livestock, we saw those 5 to 5.5 weight steers 206 to 214, upper 5 weights 199 to 207, and 6 to 6.5 weight steers from 190 to 198. I do also want to talk about our lamb market here. It's been a tough spot in 2022, but it is getting better. If we compare back to this summer, the lamb prices are up about 20%. However, if we look back to last November in 2021, we're still down about 42% in lamb prices. We are cleaning up the backlog in feed yards, so the industry is in a better place than it was 6 months ago. Looking at the most recent sale at the Newell Sheep Yards, 80-pound lamb sold 152 to 160, 90-pounders 145 to 152, and slaughter ewes getting up over $1 again, selling from 103 to 108. We have talked about the desire to expand the cow herd again, and we are seeing bred cow prices trending higher. At Torrington Livestock Markets, we saw the bred heifers top out at $2,500, averaging $2,018, and the 2 to 4-year-old cows $1,626 on the average, with the top at $1,775. The Vermilion Ranch held their fall performance sale after Thanksgiving, and almost 1,500 commercial bred heifers averaged $2,041. That was 2% above last year's sale. Real strong demand for the bulls as well, up 23% on the fall yearling bulls, averaging $8,501. We do think that this bred cow market is going to move higher. We'll see that typical seasonal increase through the winter, and that's more related to the increased costs into the cows to get them to calving. But when we look deeper into 2023 and think where we'll be a year from now, we're sure that market's going to be higher. It's just a matter of how much. With where these calf prices are headed, we know that bred stock are going to be in high demand. I do want to circle back to the bull sales again. We've kind of got into that marketing time frame, and pretty well higher across the board. At Paint Rock Angus in Hyattville, they were up 33% on the average. Keneally Angus from Whitman, Nebraska, selling an average of $95.88. And even looking at some of the commercial bred heifers selling, they were up 8% at Redland Angus, 16% higher at Green Mountain Angus. Well, there are a lot of positives in this industry right now, but one of the main concerns moving forward is inflation, the economy, and the effects that's going to have on beef demand. Beef demand really has been a bright spot in the industry for the last 20 to 30 years as we look at the trends. Last year, it was 30-year highs in beef demand, has slid back this year as we'd expect it to with the economic concerns, but where we go with rising interest rates and these high fuel costs does present a bit of a concern. The choice box beef cutout has been trending lower for most of the last 18 months, getting down to $2.50 a pound, but that's still historically high. And one thing that I think is supportive long-term, though, is just we'll see decreased beef production over the next couple of years. So we'll be asking consumers to take less beef, and of course that demand for quality beef does remain strong, so we're not thinking at this point at least that beef demand will be a significantly limiting factor to higher prices. Well, thanks so much for joining us for this month's report. As always, visit our friends at Ag Risk Advisors for more information about how they can help you manage risk. We do hope you have a Merry Christmas. We'll talk again at the end of the year. I'm Colter Brown from the Northern Ag Network.